Crypto has been a force to be reckoned with in recent years, but not every country in the world is open to its adoption. On the contrary, there are crypto-friendly countries that have gone a step further with generous tax laws and regulatory environments to encourage adoption and ensure access among the general public. Let's check some of them out. First up is Portugal. The Southeast European country has set a good example for other European countries in terms of crypto-friendliness. For starters, it currently views cryptocurrencies as a form of payment rather than an asset. Therefore, cryptocurrency transactions are exempt from value-added tax. However, income related to professional cryptocurrency activities is taxed. This includes companies that provide services related to cryptocurrency or traders who trade crypto as their primary source of income. While Portugal is considered to be a tax haven for crypto investors, this year the Portuguese government proposed a new tax policy that will impose a 28% capital gains tax, the standard capital gain rate in the country, on cryptocurrency gains made within 1 year. On top of that, it also intends to impose a 10% tax on any free crypto transfers. If approved, will this be the end of the so-called Bitcoin beach? Moving on, another well-known crypto-friendly country is Singapore. Similar to Portugal, if you buy crypto and sell it with profit, you don't have to pay tax as capital gains are not taxed. However, if you trade on a regular basis, you'll be taxed. Singapore's monetary watchdog, the Monetary Authority of Singapore, has stringent regulations to safeguard cryptocurrency investors, but at the same time create a balanced system in which crypto can operate. As a result, the country is home to several crypto projects, including the likes of Zilliqa, Quantum, Kyber Network, Bluzelle, and many others. At number 3, we have another European country, Germany. Unlike some countries on this list, Germany doesn't recognize crypto as an asset, but rather as private money. The Central European country exempts Bitcoin and other cryptocurrencies from capital gains taxes, as long as they're held for at least 1 year. The same goes for staking and lending rewards. If you realize capital gains on your staking income, it will not be taxed as long as you held the assets for more than a year. In the case that the assets are exchanged before a year elapses, they'll remain tax-exempt if the profit is less than 600 euros. Germany is also prominent for being home to several blockchain companies like IOTA and EOS. Next up, we have Switzerland, one of the initial shining stars in the world of cryptocurrencies. In 2018, Swiss banks were the first to allow crypto companies to open business accounts. Like many other crypto-friendly countries, private investors in Switzerland do not pay capital gains tax on their crypto profits. The Federal Tax Administration in Switzerland determines whether you are a private investor or not by looking at your trading volume, the time period you own the assets before disposing of them, and the size of your investment profits, to name a few. Additionally, buying and selling cryptocurrency is completely exempt from taxes in Switzerland as long as you are considered to be a private investor by the Federal Tax Administration. The European country is famous for the small city Crypto Valley, which houses popular crypto projects including Ethereum and Cardano, to name a few. Alright, at number 5, we have a small island nation, Malta. The country recognizes crypto as a medium of exchange and, more importantly, also as a store of value. This means that you'll not be subjected to any capital gains tax on all long-term profits you generate from selling your crypto. However, professional traders are subjected to a business income tax that is as low as 0% to as high as 35% on their profits, depending on the bracket they fall in on the Maltese tax system. The Mediterranean-based country is home to crypto exchanges such as OKX and BitPay. Moving on, at number 6, we have Bermuda, a Caribbean island state with a very lenient approach to financial regulations. The nation is considered a tax haven as individuals in the country don't pay personal income tax. Similarly, Bermuda does not impose a tax on the buying, selling, or holding of cryptocurrency. The same goes for using crypto as a form of payment. As it is legalized, it is not subject to any tax. In 2019, Bermuda became the first government to accept stablecoin USDC for tax payments. At number 7, we have a popular tax haven outside digital assets, the Cayman Islands. For several years, the Cayman Islands have been the go-to tax haven for investors in diverse business markets, and crypto is no exception. The region's tax authority, the Cayman Islands Monetary Authority, imposes neither a capital gains tax nor an income tax on its residents. Crypto companies are also left off the hook as there's no corporate tax for businesses. Next up is Slovenia, another country that has been very welcoming towards crypto. The country has proposed new tax laws for digital assets, but in the meantime, the European country does not view capital gains on cryptocurrency as income, which means that individuals are not taxed when selling crypto. The new law, however, proposes a 10% taxation rate and a general tax exemption on up to 10,000 euros of redeemed cryptocurrency per year, and a 5% flat tax rate on transactions. The Alpine country is home to the most crypto-friendly European city of 2022, Ljubljana, its capital, which has hundreds of vendors accepting crypto payments. At number 9 on our list is Puerto Rico, a popular destination for North Americans since the overseas territory is treated as a separate country when it comes to taxation. In the U.S., investors pay as much as 37% on capital gains, which applies to crypto and other assets. One of the tax breaks under Act 60, known as the Individual Investors Act, drops that tax obligation down to zero if certain qualifications are met. This makes Puerto Rico an attractive destination for entrepreneurs and crypto traders. Last but not least, we have El Salvador, the country that made headlines in September 2021 when it became the first country to adopt Bitcoin as legal tender alongside the US dollar, which was their national currency. The government did this to market itself as one of the few countries without crypto tax and attract more investments to the region. To top it off, they announced that all foreigners would be exempted from paying taxes on any income from their Bitcoin gains. The Central American country is hailed as one of the best crypto tax-free jurisdictions in the world. These were some of the countries that have warmed up to crypto and are even using the industry to fuel their economies. While there are still many countries that are still skeptical about the technology or have even outright banned crypto, others will nevertheless be focused on creating an environment for the industry to flourish. Which crypto-friendly country did we leave out? Let us know in the comments.